Okay, it's 8:30 here in West Perth. Thanks everyone for joining this morning off the back of the announcement that Strike and Talon have entered into a scheme implementation deed, and Strike will look to acquire Talon Energy. I'm joined today by my fellow Chief Executive Officer and Managing Director of Talon Energy, Colby Hauser. Colby's on the call. And we're going to take you through just a little bit of the background of the transaction, some of the rationale behind it, and the exciting path forward for the merged entity, which will trade under Strike. There's opportunity for Q&A. We'll try and wrap up our side of this in the next 10 to 15 minutes. And then if you could use the Q&A function, which is typed questions, they will be facilitated at the end of the presentation. So without further ado, handing over to Colby, who'll take us through some of the transaction overview.
Good morning, everybody. Thanks for joining us this morning. Obviously, Talon has agreed to a binding scheme implementation deed with Strike Energy, which Strike would acquire all the shares issued in Talon. I think pretty exciting that shareholders will receive 0.4828 of new Strike shares for each Talon share. And that puts us somewhere, in 11% of the combined company. Essentially, that 0.4828 price has an implied offer of 21 cents for Talon's Perth Basin assets, which is almost a 30% premium relative to our 30-day VWAP. In parallel, obviously, Talon shareholders have an opportunity to retain their interest in Gervantes, where we looked to spin out our 33% interest in the project. Obviously, the scheme's been unanimously recommended by our board of directors, and I think it's a very exciting opportunity, to combine our business with Strike and see where that goes. Strike's obviously very, very well positioned for future growth. And whilst Talon has several sort of catalysts, Strike has several, if not more, sort of meaningful catalysts on the medium-term horizon. And it's something shareholders should be excited about. So I guess if we look at a combined business, there's obviously, a huge opportunity to generate cash flow. Obviously there's cost savings and corporate synergies to be achieved through collapsing the joint venture. Importantly, we've reached an agreement with Strike for a convertible working capital facility that'll fund us throughout the scheme period. And I think, just sort of emphasizing that it's really exciting for us to potentially go down this road. And I think there's, an attractive premium on the table, an opportunity to join Strike in where they're going, and shareholders still get the opportunity to have continued exposure to Gervantes, which is tracking very well at the moment.
Colby, do you want to just give it a little outline on the process for Mongolia?
Yeah, sure. So, we've obviously done a strategic review over the last for several months. That's pretty well advanced at the moment. We'll continue to have these discussions. We have a very good understanding of sort of the interested parties and the way to best sort of commercialize number one, the project, but obviously make sure that our shareholders will realize additional value from Gervantes in the future.
Thanks, Colby. And so when we start to look at what the combined business between Strike and Talon will look like on the other side of a successful scheme implementation, you're looking at probably the premier Perth Basin exposure, where not only are we the operator and 100% owner of all but two of our permits, so that would be West Erregulla, where we're the operator, and also the L7 EP437 assets brought in from Talon, where we would be the non-operator, but we are positioned to be a major producer of energy in the West Australian market. The business itself will have a combined independently certified 2P and 2C of over 1,000 petajoules, which is just it's starting to get to quite a large number, which will continue to cement Strike as the largest holder of reserves and resources in the Perth Basin. I think that when you look at forecasts, this business could be seen to be a considerable influencer into the West Australian economy, given the way that the energy markets are evolving very quickly here in Western Australia with the retirement of the coal fleet and the increase in gas consumption in electricity generation and mining and mineral processing in the critical mineral space. Collapsing our joint venture means that the business will be able to take advantage of faster decision making in order to be able to optimise some of the uncontracted gas which we have at Walyering. There's obviously a firm 20 terajoules a day that we have sold to Santos, and then there is an as available portion which Santos has a right of first refusal over. But if there is alternative market opportunities where we can achieve sales at higher rates, there is a pathway towards that. Obviously, being able to make those decisions very quickly will allow Strike to start to build out its gas trading business and also take it to optimise that uncontracted portion of the production. The next part is that this is an all-scrip transaction. Talon shareholders are receiving new Strike shares, and I think that the company is on a very interesting inflection in its journey. We've just started a very high impact drilling campaign. We're mobilising the rig to the South Erregulla 2 well as we speak, and we expect to spud that well in the coming days. And that will then allow us to convert a major portion of the contingent resources that sit in the combined 2P, 2C stack to 2P reserves and look to take an investment decision at South Erregulla. So with the $82 million that's forecast to come out of Walyering, we are only going to look to build on those cash flows as soon as we can through the South Erregulla development. And very quickly we can see Strike moving into a world where it's producing in excess of a couple of $100 million per annum. That puts us in a really interesting point where Strike is really firming as a key mid-cap player in the gas and energy space in Western Australia, and we think that this is a great time for Talon shareholders to join that journey. The wells that we're looking to drill in the very near term come from an area where we've got a lot of experience, where we've drilled a lot of wells, and our neighbours are starting to drill wells as well in Mineral Resources and having success there, as well as Beach to the south, where they're currently drilling at Trig Northwest. The region has generated very consistent, high quality, successful penetrations in the Permian, and we do see this as the nucleus of value for the combined business, where we believe that after the acquisition of additional seismic out to the east, we may have what I would like to refer to as LNG upside. I see the combined business having a 2P, 2C, which if you can convert the 2C to 2P, which is what the plan for our drilling campaigns are, using the value of the Warrego transaction of a bit over $2 a gigajoule per, which was the acquisition price of Hancock to Strike, we can see that the business could be capitalised well over $2 billion with the existing reserves and resources that it has today, once converted to 2P reserve status. So it's a really great time. This is a logical, it's a compelling and strategic transaction for both sets of shareholders. The allocation of Talon's free cash flows from the Walyering asset will allow Strike to escalate the pace of its gas acceleration strategy, which is fully government endorsed, and so therefore we can see both sets of shareholders receiving a considerable uplift in the value of their stock going forward. The escalation of that expenditure profile means that we've got more free cash flow and we're less reliant on requiring to meet conditions prior to drawdown of debt, which means that we can start executing fabrication of South Erregulla's gas processing modules ahead of when a traditional banking related FID would be required. So that's a lot of the understanding behind where we sit at the moment. This is a great transaction and brings two very like-minded businesses together. And as the retention of the Mongolian assets to the Talon shareholders, there's a considerable amount of unrealised value in excess of the 21.2 cents that is implied through the Strike shares as of the close of trade on Friday. So with that, I'm just going to hand it back to Colby if he's got some answers to any questions. I'm going to open the question portal and we will go from there. Okay, scheme. I've got a question here. The scheme of arrangement is not affected until December 23. What happens to TPD's current cash and what happens to TPD's share of Walyering revenues? So as Colby mentioned, that we have extended a $6 million financing facility to Talon in order to cover some of their forward expenditures at some of their other joint ventures that are starting to ramp up. The current cash would be consumed in that expenditure profile, and the TP share of Walyering revenues would obviously sit on the Talon account and then form part of the merged entity. Next question I've got is, what are the costs of the scheme to STX and TPD? Transaction costs for the overall transaction are estimated to be less than $5 million for the combined group. And that's a result of Strike, effectively running this transaction in-house. We've only used legal advice from DLA Piper, whereas we haven't used an investment bank to facilitate this transaction. When is the Walyering gas plant expected to come online? We are maintaining our guidance that the gas plant will be commissioned and move into production operations during this quarter. It will produce first revenue. Again, that is this quarter and dollars until then. And then there's only minor expenditure between now and when we expect it to come online. The facility itself is deep in the electrical and instrumentation construction and installation. All of the welding and the mechanical pipe fitting, etc., has been completed. So we're pleased with the progress at the Walyering gas field. Last one is, if STX hits a jackpot in its upcoming South Erregulla drilling program, will it pull out of the scheme and seek a recalibration of the scheme's shares offer ratio? A simple answer to that would be no. That's not an opportunity made available to Strike and would trigger a break in the scheme implementation. We see Strike's forward program and the upside in the drilling campaign as being part of the compelling value proposition to Talon shareholders today, and that's why we would consider them, consider this deal to be in the interests of both sets of shareholders. April has said, can you please explain what has changed since the announcement on the 1st of August that enabled Strike and Talon to reach mutually agreeable terms? It's a good question, April. I think fundamentally the economics of this transaction are identical. It's a lot of the structuring of the transaction around the timing of the demerger of Mongolia. In the previous incarnation of this, Strike may have been required to continue to fund the Mongolian assets post the scheme implementation until such time that the previous Talon had managed to demerge or sell those assets, and that presented probably an unacceptable level of financing or funding risk to Strike that we were unable to breach in the time that we had over the trading halt period. This last week has provided an additional amount of time to contemplate alternative options for the Mongolian assets, which are still to the benefit of the Talon shareholders, but ultimately will see us not be able to not have the exposure to the Mongolian assets post implementation. I think we probably answered Mark Wiseman's question in regards to the timing of when Walyering will start up. This one's probably for you, Colby. Do you need shareholder approval to spin the Mongolian assets off? What is the value of these assets if it can't be spun off? Cash flow, is there still committed capex to the Mongolian assets, or has that been cancelled?
Thanks, Stuart. Yeah, obviously shareholder approval is required to spin out Mongolia. That's something that we'll see throughout this scheme period. In terms of the valuation of the asset, it is pretty early days and sort of tough to put a number on that, but obviously the project continues to impress us, and flowing gas from each of the 3 wells is definitely a step into the right direction. Yeah, I mean, there's a little bit of capex commitment, but most of those costs have been incurred around getting the pilot well online.
Thanks, Jamie. As you may have seen in some of the disclosure this morning, there has been a small pool of funds made available to Talon in order to effect the demerger, as well as pay the existing operating costs of that asset. And that has formed part of the overall economics, and that represents a more attractive and lower risk profile for Strike, given where we were previously, which was that we had an obligation to continue to fund the Mongolian assets post the scheme implementation. So I think this works out for both sets of shareholders. Those, as Colby has said, the Mongolian asset looks to be moving into a critical period in its de-risking. And given that those assets are non-core to Strike, which is a pure Perth Basin gas play, it's very easy to carve those out. I believe that there will be a demerger meeting for Talon shareholders, which will be prior to the scheme implementation meeting, as contemplated under the Strike and Talon scheme of arrangement. Can you elaborate on how the deal cash flows will accelerate the development of Erregulla? Yes. So, as I said, traditional banking debt does take time to put together. We have a uncommitted $80 million facility from Macquarie Bank for the South Erregulla development, subject to an FID. Now, that FID would be to Macquarie's satisfaction, which would require the company to have its production license, the gas contract signed, the environmental approvals, etc. There's a few key elements prior to being able to draw down the funds from that Macquarie facility. However, ahead of that point in time, the Enerflex engineering procurement fabrication contract is likely to be ready to be moved forward, which means that we can start the fabrication of the South Erregulla modules, which will take some 48 to 52 weeks to be fabricated and delivered to the farm in Western Australia. They're the longest lead items, which means that they obviously have a spend profile. An increase in Strike's free cash flow allows us to be able to contemplate bringing that decision out separately and almost treating the gas processing modules of South Erregulla like long lead items, which they're pretty big long lead items. About 80 to 90% of the equipment is in those modules. But it does mean that we will be able to make a decision there potentially slightly earlier than what we would if we were relying on the Macquarie facility alone to finance that. Every month or so that we capture of additional South Erregulla revenues, is working on around $8 to $10 a gigajoule, is around $15 million per month. So you can see that the size of the prize for both sets of shareholders is actually quite material there. And by working with Talon to bring our assets together will not only allow us to support the funding shortfalls that may exist in some of the Talon portfolio, but also support a higher free cash flow generation in calendar year 24, which will facilitate that fabrication of South Erregulla. So it's really, the two balance sheets coming together and being stronger as one. So does the TPD share of Walyering revenue get used to repay any part of the $6 million loan? The short answer is yes. And so, the loan from Strike to Talon is secured against the Walyering cash flows. Do you expect to see strike action? It's really unfortunate times when from offshore workers at Chevron and Woodside. Could this disruption provide any opportunity in the Walyering gas trading? We don't expect to see strike action at outside of the strike action at Walyering due to the fact that the facility is unmanned and controlled remotely here by our employees and operations team in the West Perth control centre that we have. Everything is remotely controlled. The disruption could provide given that the LNG projects that are in question produce about 40% of West Australia's domestic gas, there could be a short-term window where gas pricing may spike in Western Australia, given if they shut the offshore down or the upstream down to shut the LNG plants in. You would feel that that would have a disruption to the continued supply of domestic gas as well. We want to be in a position as best as we can to take advantage of that if that occurs. As I said, there's two sort of structures to the Santos gas offtake arrangement. One is a 20 terajoules a day of firm, and then there's 13 terajoules a day of as available, where Santos has a right of first refusal, but if Strike can achieve high pricing in the market, it has free to do so on behalf of the joint venture. Government approvals on Walyering pipeline commencement, are they tracking to expected timelines? Yes, they are. All the government approvals are, submitted in line and are expected to be achieved prior to the ability to inject hydrocarbons into the Walyering facility. This one's back to you, Colby. How likely is the Mongolia spin-off to happen? What are the costs of spinning off this asset?
Yeah, another thing I would just re-emphasize again, we've gone through stage one of our strategic review process. Again, we have a really good handle on where the interested parties are. And with the project tracking well and sort of delivering gas earlier than our expectations, arguably that could be sooner. Putting a price tag on demerger costs is relatively challenging based on the scenario, but I guess I would say they're not significant costs.
Yeah, and I would re-emphasise that Strike's made accommodations of $850,000 as disclosed in the announcements this morning to cover the demerger costs as well as the ongoing capex during that process. If shareholder approval is not given, what is SCX's intent with this asset? We do see that there is a strong overlap of shareholders across both Strike and Talon, and so we do think that the shareholders will support this transaction. We also think it's a compelling opportunity for Talon shareholders. However, if for whatever reason the scheme was not implemented, we would just go back into standard joint venture operations where Strike is the operator and holder of 55% of the Walyering asset. Is Strike excited about exploration at the new L7 EP437 assets, and will you expedite the mobilisation of a rig for drilling early next year? Look, this is our first non-operated asset in the basin, and so we're going to approach that with the respect to the operator as required. And so, while Strike has a rig on contract, it has allocated all of its well slots for the moment. So that's a discussion for the L7 and EP437 joint venture as and when. Until then, it's business as usual with Talon running their interests at that asset. Any update on the timing of drilling with Hancock in EP469? As you can see as you might have seen on the slide before I closed the presentation, which I'll just reopen for you. And it was also disclosed in the last Strike quarterly. We expect the spud of Erregulla Deep 1 in the first half of next calendar year, and Southwest Erregulla 1, the other EP469 well, in the second half of next year. That's Erregulla Deep up here and Southwest Erregulla over there. Okay, Tom, what are the break fees if the transaction cost doesn't go through? Break fees are very standard these days, so it's 1.25% of the transaction value. It's all disclosed in the scheme implementation deed. You can have a look at that at your own leisure. If we assume TPD Walyering free cash flow of $25 million per annum, how do you see that split to TPD exploration commitments versus South Erregulla spend versus miscellaneous? Like I said previously, we would see that the allocation of the free cash flow in order to accelerate additional cash flows at Strike would be the best use of that, and hence the allocation of capital to South Erregulla. The other exploration opportunities that sit within the Talon portfolio, we will review those and rank those against the Strike existing organic opportunities for allocation of funding over the timeframe. But the size of this business and the size of this cash flow that's coming together now will see Strike in a very good and strong position to be self-funding development projects as well as exploration. Does Strike currently own any TPD shares? We do not. And that's probably the last question that we will have today. So any closing remarks, Colby?
No, I just want to say thanks very much for the opportunity to sort of co-present here. Hopefully we answer some questions, but we'll be informing the market with our own presentation, and happy to engage with shareholders directly and potentially a webinar in the next few days.
Thanks, Colby, and thanks for joining, and thank you to all the shareholders and all the investors and analysts that are on the call today. I know this sort of is timed alongside other key results that are coming out, so I appreciate your time. And look, I'm really excited about the forward program for the combined entity. I think it's a really well-positioned business and one that should see a strong return to all shareholders involved. So thanks for your time. Please feel free to reach out to Strike if you have any questions. Until then, we'll be in communication via our ASX platform. Thank you. Bye.